Now, discretionary fund manager Cogence believes the world is entering a new period, the great unknown. Business Day TV's Bronwyn Seaborn unpacked this further with the company's CEO Jonel Matthee Ferreira.
It was quite an interesting time in the markets this year, when with more than half of the world's population going for elections. Most of those are done, but we still have the US election coming up, and that is creating some cautiousness in the market still. Then what we've also seen is interest rates staying higher for longer, inflation being sticky, and unfortunately the geopolitical war that's still going on around the globe. So all of that, taking all of that into account, it has led to quite an uncertain market environment this year.
A lot of people read uncertainty as bad.
Yes.
Yet that's not necessarily the case.
Definitely not. Uncertainty is actually great for creating opportunities, but it's selective opportunities. Our philosophy is also to have a well-balanced and very diversified portfolio, true global reach for diversification. So I think if you've got a very concentrated portfolio where you just focus on one sector of the market or one style, then it's very difficult in uncertain times, because you'll have some times when certain portfolios will outperform and underperform. But with the combination and the style neutral approach we have, we make sure that clients has got a lot smoother ride in getting to their end goal.
And what I'm hearing there is active management.
Yes. So I know there's been lots of debates and lots of discussion. So our portfolio is actually a combination between passive and active. But where we use passive, it's generally smart beta type of portfolio. So we all know you've got your passive where you just follow an index, but there's specific indices that follows very specific trends. So we have active managers in our portfolio that does add a lot of alpha for our clients, but we also want to be nimble with this uncertainty. You want to be able to move when there's opportunities in the market. So we've got a long-term strategic asset allocation. That is our view over the longer term, but we know the market changes daily. So we want to be nimble to be able to take views, dynamic views around that. And that's where we would typically also use these solutions, where you can move in quicker than in a normal active, traditional active portfolio.
We talk a lot about the macro picture and how much risk and uncertainty that is causing. Is there anything at the moment that kind of cuts out that noise, particular trends in terms that you're seeing in investment, where it's not necessarily about the macro picture, but there's still opportunity to get in there?
So I think one of the trends that everyone is speaking about is AI. And I think we traditionally think at, oh, which companies? AI companies. But that's not the case at all. So AI is a lot deeper, from creating more electricity to power, the need for more of those utility companies. It's those companies that actually take the AI into account and improve their processes that will benefit from that. We also know last year it was the Magnificent Seven that drove the market. This year it's been much more broad-based, and also fundamentals are looking great. So there's definitely a more broad-based recovery in the market that is benefiting clients' portfolios. We've also seen interest rates, as I've mentioned, staying higher for longer, and we know that then that creates certain opportunities in the bond market as well. We've also seen the UK market decoupling from the market and how they usually all move in the same direction. So it's definitely looking interesting from those perspectives, and then also taking some alternative positions for diversification benefits, like gold. We've seen gold rallying the last while, so it's also using those type of opportunities. So we definitely believe, we've also heard this morning that 50% of operations in America are now done through AI and machine learning. So with those increasing, there's more opportunities in those sectors as well. So I think it's a lot more broad-based than thinking of which company is going to benefit from it. Definitely opportunities in the market in selective sectors.
With so much at play, we talk about various sectors where we're going to see a lot of growth. We talk about the macro picture. Can we scenario plan when it comes to portfolios?
Yes, we can actually do that, and that is one of our most powerful benefits with our partnership with BlackRock. They've got the most powerful technology, Aladdin, and with the Aladdin technology, we can look at what will happen to your portfolio today in different scenarios. But the advantage of that is that it's always also forward-looking. So we can stress test a client's portfolio on if the interest rates go up by 10%, what will happen? If the rand weakens by 10%, how will that affect your client's portfolio? Aladdin actually looks at more than 3,000 risk factors, and that we take into account when BlackRock, with us, put these solutions together. And I think that is one of the most powerful tools we have with this partnership, because we know risk is critical in constructing portfolios and also making sure that your portfolio are well risk adjusted.
That was the CEO of Cogence, Jonel Matthee Ferreira.